Hello, and welcome to another episode of Money Ministry. I'm your host, Craig Mack. Um, if you're new to the channel, welcome. I also would strongly recommend that you go through the playlist and look at the previous sessions that I've had, because each segment builds on the previous one. This content is for new people that are new to investing and want to learn the basics and the fundamentals of how to invest in the stock market, um, and earn money and build wealth for themselves and their families, and to also have generational wealth for their families. And so that's what this is about. I put a little bit of a spirituality spin on this because I believe Scripture provides guidance into how to invest. For example, in Scripture, it says that, you know, God is inside of you and you are inside of God. And so when it says that you're supposed to honor God with your first fruits by paying yourself first from your paycheck, you are fulfilling or in alignment with that guidance. And so I'm not talking about a whole lot of money. I'm talking about just $50 from your paycheck and put it into a savings account or put it in or put it into a brokerage account to get yourself started because you can't participate. Well, you can. One of the ways that you can participate in the stock market is to invest for yourself, by yourself, but you have to have a brokerage account. If your company has a 401k, I strongly recommend that you participate in that because it is taken out before any taxes are taken out. Okay. I'm not a financial advisor. I highly recommend that you consult with a financial advisor to make your financial decisions. I'm not going to recommend any stocks to you, but I will show you how to do the research so that you can be more educated on how to invest in the stock market. There was some recent surveys done, and over 50% of Americans do not participate in the stock market at all, even if their employer offers the ability to do it through a 401k. If you watched President Trump's State of the Union, that's why he had made the recommendation that the government is going to start offering um, money or incentivize people to participate in their 401ks or companies to offer 401ks to their employees so that they can participate in the stock market because the stock market is the greatest wealth generating mechanism ever created by man, ever. That is how you generate wealth for yourself and for your family. So, with that, during the last session, I talked about how to look through a balance sheet of a stock that you're looking at to make the determination of whether or not it's a good stock. We looked at the upward trends of the current assets and different components of the balance sheet. So in this segment, and that's considered a fundamental analysis, by the way, that's the term used for that kind of analysis of a stock, fundamental analysis. I'm about to kick off with starting with this segment, how to do a technical analysis on the stock market, on the stock market, but how to do a technical analysis, not only in the broad market, but also a technical analysis on any individual stock that you are considering buying. Okay. And if you recall from the last segment, I suggested, especially if you're just starting out, to kind of look at companies that you are currently using as a consumer, because by investing in those kind of stocks, it positions you to get back some of the money that you've spent with them. Okay, instead of it being one-sided, it's a two-way deal where now you're able to get back money if the stock grows in price and you have shares of it, you grow in price. That is your way of getting back, recouping some of the money that you spent with them. Amazon's a perfect example. That's the example I used in the last segment, where just about everybody uses Amazon. So why not own stock in it and then be able to get money back that you spent with them? Okay. Um, so as always, I'll try to establish my credibility for those of you that are new to the channel. Let's see here. I'm going to share my screen here just a second. Okay. This is my portfolio's performance over the last, since 2023. I have 180% return on my money. I have outperformed the NASDAQ and the S&P combined. Okay. And then if you look at the last 3 months, I have a 9% return. And again, I've outperformed the NASDAQ and the S&P. And as you can see, 9% is better than what you're getting at the bank right now in your savings account. Um, excuse me. So I've been pretty consistent. And in year to date, since January, I've got a 9.48%. And I am again still beating the S&P and the NASDAQ. Okay. I've also been tracking my performance. For the month of February, I was up 2,600. By the end of that, I started the channel back in the first week of February. For March, with the war and everything that's going on, I'm down a little bit. I've given back about half the gains that I had in January, but that's okay. I'm still positive for the year. So with that, let's take a look at candlesticks. Now, what I do with my content or this content is that I put it in decks so that while you're looking at this, you can take notes, you can pause, take screenshots, however you want to do it, so that you can study on your own, go over the material again if you need to, in case I went too fast or you want to review something that I covered. I pretty much summarize the slides. I don't try not to read them because you're capable of reading, but I try to summarize what the slide is trying the message the slide is trying to convey. Okay, so with that, candlestick patterns. When you look at a lot of times when you look at the programs like CNBC, where the analysts are on and they're looking at charts, whatever, a lot of times you'll see candlesticks on the chart. And candlesticks were invented back in the 18th century in Japan. This is where the rice traders, when they went to the market, they developed this system of candlesticks to gauge the emotion of buyers and sellers toward in the market. Is what they did. It measures the emotion. That's what it's really tracking. Okay, and it does it through the price action. It can give you a sense of what the emotion is toward the stock or towards the overall market. Okay. Now, when you're looking at a candlestick, this part here, this is considered the body. Okay. If it is green, that means that the stock opened up down here at this price and it closed above that price. It closed above its opening price. Okay. This part here is called the wick, here and here. And when this represents how low the stock went during the course of the day, how high it went throughout the course of the day, and then where it settled. In this case, it settled here. Okay, that's what makes up the body of the candle. Now, this is green. That means that if the price closed above its opening price, it opened here and it closed down here. If this candle were red, say for instance, this candle here was red. Okay, if it was red, that means that it closed below its opening price. So it would be represented here. It opened here, but it closed down here, and it will make the candle red. And again, the wicks show what the high was for the day and what the low was for the day for that stock. Did I skip one? No, I didn't. Okay. So one of the patterns of a candle is called a hammer. Okay. And they come in different, they can be in different shapes. But this is the traditional looking hammer here. Okay. And what this is here's the wick but uh, it closed at its high point. But it went down here, but this is the body. Opened here, closed here, and it dropped down as low as here. Okay, that's a hammer. And what the hammer symbolizes typically is that it symbolizes, it's announcing a change in direction. Usually, the change in direction is the opposite of what the trend was. So, if, say, for instance, that we're looking at these, this was a trend upward, but on this particular day, it formed a hammer. The hammer means there's a change of direction, opposite of the trend it was currently that preceded it. So in this case, if it was an upward trend and you got a hammer, more than likely that means that it's going to go down. The market is going to go down. This is a pattern here. This is a bullish pattern. That's what it represents. So when you have a red candle, right, means it was more selling than buying of the candle of the stock. When you have a red candle and then you have a large green candle the next day, that's considered a bullish engulfing. That's what it's called, bullish engulfing, meaning that the stock more than likely is going to continue its upward trend. Okay. The opposite would be true if this candle was green and this candle was red. That is considered a bearish engulfing, meaning that the stock is about to change direction and head downward. Here's the example of it here. The previous candle was green, okay, but the last candle is red, almost double the size of the previous candle. That means that is a bearish engulfing, and that more than likely the stock or the market is about to go down, depending on what chart you're looking at. If you're looking at the S&P or if you're looking at the individual stocks chart. Why use candlesticks? Well, it gives you a quick visualization of the pattern of the stock and what they're, again, measuring or keep tracking the sentiment, the emotion of buyers and sellers toward that particular stock or that particular index that you're looking at. It helps you to determine patterns and trends, okay? And it helps you to make informed decisions. However, you should not, and I'm sure I got a slide later on in this presentation, you should not totally rely on candlesticks. You use them as a tool to make up your decision. It's just a tool. It's a piece of the puzzle that you're putting together to make a determination of whether or not you want to buy the stock or if you think the market is going to go up. It is a tool that you use along with some other tools. And again, this is the beginning of a series on technical analysis. There are other indicators that you can use along with your candlesticks to make that determination, to make a decision on the stock. We're going to go over that in future sessions. So bullish candlestick patterns, as I mentioned before, you got your hammer that can give you that. I went over what the bullish engulfing looks like. This talks about what a morning star looks like if it's between a bearish and a bullish candle. And so that's what that particular pattern is called. I don't see it on this diagram here, but anyway, moving forward. You got your shooting stars. So it kind of, this breaks down, and that's why I put it in this format. You can pause and take a look at this, and it gives you different descriptions of what different kind of candlestick patterns look like, okay? Okay, how do traders use? They combine the patterns with support and resist levels, and we'll go over that with the trend lines. That's going to come in that'll probably be the next segment that I do, where we'll establish support and resistance levels and show you those trend lines and how to do that, okay? Use pattern entry or exits signals, practice pattern recognition in demo accounts, You can practice that in demo accounts for yourself, or if you can just pull up your charts on your platform on your brokerage account without making any kind of trade or investing in any kind of stock. And you can just simply pull up either a stock or pull up the S&P or the NASDAQ to look at the charts to see if you can spot a trend in the chart. Okay. Candlesticks charts reveal the language of the market psychology and trader emotions. So we've covered that before. Helps you to improve your timing of when you may want to get into a stock or when you might want to sell. As I mentioned before, you combine the candlestick analysis with other technical tools to optimize your trading results. And of course, start practicing. See if you can point out, recognize different candles in the chart that you're looking at, either for the index or looking for the individual stock. Okay? All right. So today we covered candlesticks. As I said, this is going to be the first of a series of technical analysis indicators that I'm going to cover in this channel. Um, Again, if you are new to the channel, I highly recommend you go back through the playlist and go to the beginning and start so this content will make more sense to you with what I'm covering. Okay, and if you've been with me from the very beginning, I appreciate it. Please hit the like and subscribe button so that when I create more content, I'm trying to be on a weekly cadence. So when I create new content and publish it, that you'll be notified so that you can view it. Okay. Thanks for joining me. This has been another episode of Money Ministry. Take care.